Discover the secret to investing in real estate with limited funds. You don't need a large bank account or years of savings to get started. With smart strategies and a little creativity, you too can start building your real estate portfolio and securing your financial future. Welcome to Capital Guru, and today we're counting down 10 methods to invest in real estate with little money. Before we begin, we publish new videos every week, so be sure to subscribe for more finance content. For this video, we'll be guiding you on the methods to successfully invest in real estate with very little capital. Keep watching till the very end for useful advice on avoiding becoming home poor. Number 10. Hard money lenders. Hard money lenders impose fees in the form of points, in contrast to private money lenders. These points, which can be 3 to 5, are an additional upfront percentage fee based on the amount borrowed, on top of the interest rates that hard money lenders charge, which can be between 10 and 18%. Investors must conduct their due research because fees and interest rates with hard private money lenders vary. Number 9. Wholesaling. Wholesaling is a real estate investing strategy that doesn't demand a good credit score or a significant down payment. Instead, all it takes is having the appropriate numbers in place, finding discounted properties, handing over the contract to a possible buyer, and receiving payment are the fundamental components of real estate wholesaling. Number 8. Equity partnerships. Partnerships are a highly popular way to invest in real estate. The co-founder of Leeline Sourcing, Edward Shaw, states that forming partnerships is a common strategy for real estate investing. As an investor, someone else can make up for your shortcomings. In many partnerships, one partner will locate a distressed property at a lower cost, while the other will utilize their credit standing and available funds to finance it. Just make sure that everyone contributes something. Prior to forming any form of partnership, more seasoned investors should always discuss goals, risks, roles, and rewards. Number 7. Home equity. Home equity is another choice for investors without a down payment. Since home values have increased recently, there may be more funds accessible than you realize, making this a potential alternative. There are typically two ways for investors to profit from this strategy: either rewrite the initial loan and perform a cash-out refinance, or leave the first loan in place and add a home equity line of credit. Number 6. Option to buy. This technique, sometimes known as a lease option, enables investors to purchase buildings without immediately assuming ownership. However, the investor will formally agree to purchase the home from the owner at a certain price in the future. In exchange, the investor agrees to rent the property out for an extended period of time, with the option to acquire it at a later time for a certain sum. Number 5. Seller financing. Unlike traditional loans, seller financing works like this. The investor purchases the property from the homeowner-seller rather than a bank, and the two sides sign an agreement that states an interest rate, repayment reschedule, and consequences of default that both parties have agreed upon. Number 4. House hacking. As the name implies, house hacking is a real estate tactic that enables astute investors to profit from a special circumstance. But with this specific exit plan, investors will generate rental income by renting out their principal house. People who own multi-unit homes, for instance, could decide to rent out the spaces that they aren't using. In this approach, the income from the rent might possibly be used to pay down the owner's mortgage. On the other hand, those who live in single-family houses could decide to rent bedrooms when they can. In any case, home hacking enables investors to reduce the risk of vacancy while simultaneously increasing cash flow. Number 3. Government loans. Of all the financial options accessible to investors today, government loans are arguably the most well-known. A list of government loans that you might already be aware with is provided below: an FHA loan, a USDA loan, a VA loan, program Good Neighbor Next Door, Freddie Mac Energy Efficient Mortgage or EEM, FHA Section 203K, Native American Direct Loan, and local grants and programs. It is important to keep in mind that there are several characteristics of government loans that are not ideal for home renovations for a quick profit. One residence may only be the subject of a VA loan, for instance. However, compared to private and hard money lenders, FHA loans sometimes have loan terms that are much longer. Government loans are less appealing than almost every other option on our list, since it might take months for them to be approved. You may have access to more flexible alternatives if you use a USDA loan or VA loan, particularly if you initially buy your prospective rental properties as your personal residence. When trying to invest in real estate with little to no money, this is primarily helpful. You can buy a house with no money down to live in it as your primary residence for at least a year before turning it into a rental when you leave. Not just your rental properties, but also your primary house count toward equity building. When buying a main house, credit score and down payment criteria are also more lenient. Living in homes you want to turn into rentals is a typical strategy to get around stricter lending requirements. If you live in one apartment, FHA loans only require a 3.5% down payment for duplex financing. You may then make more money by renting out the second half of your duplex. This method might be helpful for people who are just beginning to invest in a little amount of their own funds in real estate. You may pay off a substantial chunk of your mortgage payments with a little down payment and a surge in rent. Number 2. Microloans. Microloans will continue to be a possibility as the peer-to-peer economy continues to influence how real estate investors do business. Microloans are another type of peer-to-peer financing that allows consumers to invest in real estate since they are issued by private parties rather than by banks and credit unions. Microloans can be distributed among a number of investors or granted by a single lender, with each one anticipated to cover a portion of the borrower's requirements. And number 1, investing in REITs. A fantastic place to begin investing in real estate is through Real Estate Investment Trust, or REITs. Investors acquire stock in a business that builds or manages real estate instead of actual properties. This is how investing in REITs is comparable to investing in stocks, yet REITs still let investors profit from all that real estate has to offer. A great way to get passive income through real estate investment without having to make your own purchases is through REITs. Avoid becoming house poor. House poor is a term used in banking and real estate. The phrase refers to persons who overextend themselves while purchasing a property and end up short on cash for emergencies. These homes are in such a tight financial situation that it is hard to recoup when unanticipated occurrences occur, such as a job loss or damaged equipment. Unfortunately, when trying to invest in real estate with little money, this is all too typical. When buying real estate, there are a few measures to prevent financial difficulties. Always maintain your emergency fund distinct from other funds and leave it out of your home buying budget estimations. In such a case, you would always have money to fall back on. In certain circumstances, saving your emergency funds may compel you to put down less money than you would want. Keep in mind that even if you must initially obtain mortgage insurance, you may always refinance later on when you have greater equity in the property. Did you enjoy this video? Check out these other clips from Capital Guru and be sure to subscribe and ring the bell to be notified about our latest videos.